If you're just joining us, welcome into our Quarter 3 Family of Services State of the Union. Very excited to have you all here. We've got a lot to cover today, which is always good. If this is your first time ever joining one of these, you're really in for a treat because our Family of Services leaders do a great job at taking what seems kind of complex and a lot of the noise of what's happening in the marketplace and breaking it down into bite-sized, actionable pieces. So that's what we're in store for today, and it's great to have you guys all here with us. So first thing that I'm going to do is I will share my screen and then we will go ahead by kicking things off. So first up, we have Mr. Benjamin Jean with Kai's Property Management. Benji, welcome in. How are you, sir?
I'm doing well, thank you.
Good. Thanks for being here. So first thing, kicking right into it, guys, is legislation. I know there's a lot of things, people asking questions. What has passed recently? What didn't pass? So walk us through this. What's going on, Benji?
Yeah, so what we had that just passed in June was what I think is a great piece of legislation. We have seen an increase in renter fraud over the last few years, whether that's identification fraud, pay stub fraud. Obviously, we know that now we have things like ChatGPT and Claude, which make things a lot easier to um, create fake information. And so what the state of Florida did was they passed House Bill 1293 in June, which takes effect October 1st. And what this does is it now makes it a felony for a prospective tenant to falsify information in order to obtain housing. Okay. So if a tenant creates a fake ID, fake pay stubs, misrepresents themselves, that is now a felony. It also points out that historically, if this were to take place, okay, an owner would have to file a notice to cure with the tenant. Okay. Typically, it's a 7-day notice to cure. In this case now, that can be you can forego the 7-day notice to cure, and you can immediately cancel the lease, terminate the lease. So hopefully, the hope here is that this is going to dissuade a lot of tenants who have in the past or plan to illegally obtain housing not to do that. So it remains to be seen how much they're going to really enforce. But this is a really good bill that passes to help landlords.
Got it. Great point. Yeah, and so you were obviously walking over this here. What didn't pass, Benji?
Yeah, so you're going to have to go down to the next slide because I don't remember what my wife told me 10 minutes ago, let alone what I put in the email 3 days ago. So what didn't pass? Okay. There was a House bill that would have extended the grace period for late rent from 3 to 5 days. So again, here in the state of Florida, it's really up to the landlord what amount of days they would like. Personally, in the property management field or in my life, I think that grace periods are somewhat ridiculous. I do think 3 days is fair. But if you know your rent is due on a certain day, just like your credit card payment, just like something else, it really should be paid that day. But this was set to make it a standard 5 days, and that did not pass. The second piece was House Bill 107, which would have added eviction protections for domestic violence victims. Unfortunately, this didn't pass. I think there is a benefit to this, but that also did not make it through committee.
Got it. And Benji, we had a question that came through regarding
Sure.
fraud. And so the
Yeah.
question was, does that fraud include false statement if disability to get your pet approved as an ESA?
So it doesn't specifically state that. This is really talking about identity and pay stub fraud, right? And more specifically, it really talks about the identification part of it. So no, it does not take into effect service animals or emotional support animals. That we are waiting for more of a federal guidance on, I think. So if you remember a few years ago, the FAA started to crack down on, people bringing their emotional support peacock, onto a plane. Um, and so I think on a federal level, that's going to start happening a little bit more, and that will then trickle down to the state level. But we have not seen anything specific to that to date.
Got it. Okay. Thank you for clarifying that. Appreciate that, Benji. What's going on with Boom Screen? Is there a new
Yes.
launching system? What's
You
going
may have
on?
heard me talk about this before, and this is a really great time for me to talk about this again because what we are doing is elevating both the experience and the service offering with our background screening. Many of you have heard me talk about some of the issues stemming from some of the other screening services out there. And screening has really been pretty stagnant over the years as far as what it does. So typically, you're going to get credit history, criminal history, eviction history, and collection history, which is exactly what we do through our current screening. In September, we are launching a new system, which is going to bring us into the future, whereby, and it sort of dovetails with what we just talked about with the House bill, there is ID verification is one of the new pieces, which is that every applicant is going to take a scan of their face and a scan of their ID. This does also include international IDs, okay, so international passports. It is going to match the images, but it's also going to have an AI screening system that's going to determine whether that is a legitimate identification piece or not. So that's a really good piece to help crack down on the ID verification. One of the other really big things is to cut down on payroll fraud. We now have the ability through this system where a tenant applicant can log into their payroll system directly and pull their pay stubs directly from their ADP, Paychex, whatever payroll system that their company uses, which will also crack down on the payroll fraud. They also have the ability to log directly into their bank statement using a Plaid. It's a secure system to pull bank statements if they are 1099 or gig workers that may not have a W-2 or pay stubs from an employer. And it does also give the ability for them to upload any pay stubs or bank statements. If they choose that piece, then the system will also scan those pay stubs and bank statements to determine if there's been any PDF editing to make sure that the correct amount of taxes are being, deducted, that someone didn't download a copy of a pay stub from ChatGPT, but it had, historical years tax amounts. And it will add everything up to make sure that it is a legitimate bank statement or pay stub. So it's a really great system. It is also going to send out notices directly to former landlords in order for the landlords to verify that they were tenants, that they were good tenants, or it may say that they were bad tenants. Did they leave owing money? So this is a really good, robust system that we think is going to really help our landlords and tenants, if they're seeking housing, to show them in the best light and help our agents cut down on the time it takes collecting all of those pay stubs, bank statements, etc. It's all going to be streamlined through this process. The other nice feature is that this does come in Spanish. So I know I get a lot of calls all the time about our current application. And unfortunately, we didn't have the ability to offer it in Spanish. This does. It also has a 24-hour live chat for assistance. So if somebody does get stuck or they have questions, there is a chat button that someone will help them immediately. That is also available in Spanish. So it is a really great new addition. It is still going to be accessed using the same link. So we will let you know when we redirect it, but myrentalscreening.com is still the site. It is still the location. We will still get the results back to you the same way that we do now, because they will note who the agent they're working with is or the address of the property they're applying for. The other nice piece is, and I've gone through it, is it is extremely user-friendly and easy to operate. So there were some snags with the current system that we use, simply because we aren't developers. We can't change that. But this system is much easier and user-friendly, especially on mobile devices. So we are very, very excited to be offering this, and look out for notice that it is turned on. The one other quick change is, the current fee is $50. Because of the added cost of what we're offering, this is $59. So it is a little bit of an increase, but we only took it up as much as we needed to cover the difference. And so we think that this is going to help reduce the time that it takes you to collect all the information and really be a big benefit.
Awesome. Thank you for that walkthrough, Benji. We had a few questions come through on this
Sure,
point.
please.
The first one is, will it still be myrentalscreening.com in terms of the URL?
Yes, that is
Awesome.
still going to be the URL. You still send applicants, you still list that in your MLS broker remarks that all applicants to be screened at myrentalscreening.com.
Awesome. Got it. Thank you. And then the next question is, will you be able to do international screening?
Very good question. That still remains a very niche part of screening. We do not offer international screening. There are only a very few handful of companies that actually offer that. They're very, very expensive and they take a tremendous amount of time because there are different systems out there, right? So Europe, their credit system is different. Interpol is their criminal enterprise or their background screening system. So we don't have links into that. And so there are only a couple of companies out there that really do international screening. Unfortunately, we can't offer that. We are, though, in the process of adding the feature, and we will note when it is ready. But we do have the ability to add in petscreening.com. So there is a company out there, petscreening.com. They will do background checks on animals, right? And background checks to determine if an animal is a legitimate service or emotional support animal. So that is a feature we are working on coding to make sure that we can offer that. Once we do, we will also let you know that as well.
Awesome. Thanks for that, Benji. We had another question. I just asked for some clarification on it. So if it comes back up later on, I might
Sure.
just send it to you via email. We can cover it that way. But Benji, thank you so much for all these updates here. And the hardest question I always like to leave everybody with is what is the golden nugget takeaway? I know you covered a lot of great things, but when our associates, illustrated associates, are thinking about Kai's property management, the new updates, what do you want everybody walking away with today?
Yeah, I think, look, our goal is to simplify your life to a point where you can do more transactions. So whether that is with the screening, whether that's with our property management service, anytime that you have to take time out of your day selling to deal with tenants, owners, collect bank statements and pay stubs, that's time you're not selling. Lean on your FOS, lean on property management. We're here to help you guys and facilitate you doing more business.
Awesome. Love it, Benji. Thank you so much. Really appreciate it. As always, a wealth of information. Guys, if you didn't get a chance to ask your question to Benji today, feel free to send him an email, or you can send me an email and I'll pass it on to him and his team. They're world class. They do an amazing job. They respond extremely efficiently. So, Benji, thank you very much, sir. Really appreciate it. All righty. Next up, we have Mr. Raul Molina with Home Partners Title. Welcome to the stage, Raul. How you doing?
Thank you, Stephen. Doing well.
Awesome. Awesome. Glad to hear that. So, first question for you is what's going on with short sales in distressed properties?
Oh, well, it's actually we're seeing a comeback in short sales. Short sales are trending upwards. They have increased about 10% from 2024 to 2025, and recently another 16% year over year in the first quarter of 2026. And Florida is a major player in this trend. Miami, along with Tampa and Orlando, are among the U.S. market's largest numbers of short sale listing increases in the nation. But actually, Lakeland is recently the nation's highest percentage of short sale listings. So that's a bit interesting news there. But definitely in the center of the whole thing. In addition, Florida has also the highest state foreclosure rates during the first half of 2026, with more than 20,000 foreclosures started. which is reinforcing signs that there is a growing homeowner distress out there. One reason is probably due to the reduced equity. Owners who purchased near the top of the market with smaller down payments may have difficulties selling or conventionally selling their homes and getting value for it, especially if the values have declined or their financial situations have changed. So it's not 2008 again, but realtors do need to freshen up on their knowledge of liens and lender approvals, HOA balances, judgments, and really bake into their contracts longer closing times because of the possibilities of short sales. But it's also, Stephen, important to remember that Home Partners is here to help. If there are any doubts that there might be some delinquencies in a mortgage, they might be underwater, there might be some judgments, reach out to us because we could do a pencil search prior to the listing or during the listing prior to the contract to see if anything does come up on public records, anything that we need to be ready for so that when that contract comes in, we can hit the ground running. We can also, and we always do, order our title searches and our lien searches on day one so that there's no surprises a week or two prior to closing. So you'll have that advantage as well. And we also have short sale resources in case there is a short sale that is needed. We have negotiators that we work with to be able to be the one-stop shop for you guys.
Got it. Thank you for that, Raul. All right, so those are on the rise. Got to brushing up, like you said, and freshen up on the understanding and education around that. What's going on in
Yep.
the world of cryptocurrency? It's stable coins, real estate closings. How are they being impacted?
Well, it's the buzzwords, right? The buzzwords of today are AI and cryptocurrency, blockchain, all those things. But despite some misleading advertisement out there by some title companies, cryptocurrency is not yet a commonly used currency directly for closings. Okay, and the key word there is directly and not yet. The title industry is looking for innovative ways to examine how digital currencies and assets can become a part of the real estate transaction, but we're not there yet. What we have seen, however, is how cryptocurrency is converted into US dollars to purchase real estate. No different than you would convert any foreign currency for closing. So the way that it works basically is just like you would any foreign currency, you would find a entity that could convert those cryptocurrencies, a wallet, into US dollars, and then deposit that into the escrow for closing. So Home Partners now, together with our underwriters, one of our underwriters has partnered with Crypt Escrow, which is actually a company that helps unlock the ability to support crypto-backed real estate transactions for our customers and their clients. So Crypto Escrow is a crypto to US dollar solution that helps buyers use cryptocurrency in real estate transactions by converting approved digital assets into US dollars and wiring those funds directly into the settlement process. We have a 33% negotiated discount available for all buyers that are referred by Home Partners. So when a client wants to use cryptocurrency in real estate, in a real estate transaction, Crypto Escrow manages the review and conversion so that the closing side receives US dollars by wire. So this is an opportunity to expand and meet the client's expectations when they want to use cryptocurrency in a real estate transaction. And the way that it works, Stephen, is very simple. It's Home Partners will make the introduction of the buyer to Crypto Escrows, letting them know about the discount code so that they get that 33% off, which is basically instead of it being 1.5%, it goes down to 1% of the transaction for the conversion. Then Crypto Escrow performs the review and the onboarding of the buyer. The buyer then transfers the crypto funds to Crypto Escrows using a secured wallet, their own secured wallet. It's a very secure process. Then Crypto Escrow converts the funds to US dollars, and Crypto Escrow wires the US dollars into our escrow account using our secured wire instructions. So it's a fairly simple process.
Got it. Okay. Thank you for that, Raul. Yeah, it's definitely something that, is a buzzword, like you say, cryptocurrency, people being interested in that and what's going on there. Question that came through is it said DeSantis always allowed or is going to allow or passed a law to allow abundance silver coin as payment. Do you see that in the future as a mix in this process?
Well, I know that there is a government and private sector joint effort to try and make cryptocurrencies and different types of coins more accessible for stable transaction. In fact, there is an effort for making a stable coin, which is really backed by the US dollar and floats right with the US dollar. Because the problem with cryptocurrency is the volatility. It could be literally in 1 second, it could be an X amount, and then all of a sudden, the next second, it's Y amount. So the conversion then becomes very difficult because when they wire the funds, when they go ahead and do the exchange, it could be a certain amount, and by the time it's received, it's totally different. So they're trying to come up with a stable coin to backed by US dollars to make it easier for that. It very well may be the silver coins. What I've heard of is what's called a stable coin. And we've also heard of the US dollar coin. So if we find out more, we'll definitely let you know. But right now, those are the two that I've heard of.
Got it. Thanks for that, Raul. Yeah, and I think that's one of the benefits, again, of having such an amazing family of services team, guys. You're hearing it. They're on the cutting edge of this. If there are other updates, things that come out, they're going to let you know as well. So great points there, Raul. Now, also, what's going on with the Florida property tax reform, Amendment 3 specifically?
Yeah, so we've known about this already for a little bit. Florida voters are now scheduled to consider a significant property tax constitutional amendment this November, which will require 60% voter approval. So it's important to remember it's not yet a law, and it's not a law that's going to be passed yet. It's a constitutional amendment, and it will only be instituted if it passes 60% voter approval during the election in November. So Florida Amendment 3 is now officially a part of the November 2026 ballot, and is currently listed as active by the Florida Department of State. I don't know if you've heard, but recently there were fears that the amendment may not even make it to the voters in November because a Leon County judge, David Frank, found portions of the original ballot wording misleading and ordered it rewritten, and there were questions whether it could actually be done in time to meet the deadline that the judge set. So it almost got derailed, but Florida Attorney General James Altmaier was able to timely revise the ballot, to which is now, and this is a mouthful, increased homestead exemption, lower cap on increase in non-homesteaded property assessment. So that's politics for you guys, but the proposal itself is still the same. It has not changed. It would increase the homestead exemption for non-school property taxes to $150,000 in 2027 and $250,000 in 2028, followed by inflation adjustment amendments. Amendment 3 also would have language that says that a 5-year restriction applies to some who had not maintained a permanent resident in the state of Florida as of December 31st, 2026. So that's important to understand that if you, as a realtor, are selling this to come to Florida to people in other states, that they realize that they have to be a Florida resident by December 31st, 2026. That means that the key test appears to be Florida permanent residency by that date. So Florida Statutes 196 defines a permanent resident as the place where the person has his or her true fixed and permanent home and principal establishment. Okay, so that's important to understand. That means the key test appears to be that it has to be before December 31st. Okay, and they have to have their true fixed permanent home and principal establishment in Florida by that time. So it can't be that they just live here, right? They have to already have owned property in Florida for that. It would also reduce, in addition to the homestead, the annual assessment growth cap on many non-homesteaded properties from 10% to 5%. potentially benefiting investors, second homeowners, and other property owners. The legislature's analysis estimates the proposal could eventually reduce local non-school property tax revenues by approximately 11.9 billion annually, creating debate over affordability versus funding for local governments. So basically, industry takeaways, realtors and title professionals will need to be especially careful when discussing further tax bills with buyers because a seller's current tax may look very different from what it did a year ago. And that does play a lot into proration. So we do see a lot of adjustments when it comes to adjusting these prorations in the future. It's going to be very interesting to see how we're able to do that and to try and limit the surprises in the next coming year after they purchase. So
Yeah, great points, Raul. Really great points there. We had a few questions come through as well while you were going over that. One was about the slide prior, and is it possible to get a flyer to give us give a buyer about crypto if they ask for one?
yeah, actually we put one out there, and it was part of the Family of Services newsletter that went out, but we'll definitely go ahead and recirculate one.
Okay. Okay, got it. Awesome. And then another question that came through on this point, Raul, was how would portability be affected?
Portability. Well, I actually did not see anything on portability yet, but that's a great question. I could definitely look into that and get back to you on that. But I didn't really see anything on portability regarding this new amendment now.
Okay. Okay, got it. And then another one that just came through on this, Raul, is if this amendment passes, will it apply to properties held in a trust or an LLC?
Another good question, but the key test would be if it is if the trustee is a Florida resident. So it would have to be a Florida resident and before December 31st, 2026. So as far as it being in a trust or not, I don't see how that it will affect it. As long as the major trustees are Florida residents, but definitely something that I could look into further and get back to you on as well.
Okay. Awesome. Thank you for that, Raul. Really appreciate it. Now, Raul, as you also wrap up and conclude today, if you were to leave us all with a final kind of golden nugget, a golden takeaway when our associates think about title and what's going on over at Home Partners, what do you want everybody to walk away with today?
Well, most importantly is, like Benji said, having FOS as a resource. We're here as a title company, not just to do your closings and your transactions. Well, we love to have all your closings, but we're here to be a resource for you and know that you have a subject matter expert in title as part of your team. Whether we are actually handling your deal or not, at that moment, we can help. Come to us as a resource either before you have a contract, if you need a pencil search done, if you need to send us some documents to take a look at, some trusts, for example, or some powers of attorneys to see if they're valid prior to it becoming a problem down the road. We're happy to take a look at those for you and be that resource to help you. Or if you have a transaction already going on and the other side chose and you have another title company, we're happy to provide a second opinion if something comes up that you're not too sure about. We're happy to take a look at that and be that resource for you.
Awesome. Love it, Raul. Yeah, thank you so much for that. Again, another great team, guys, that you guys have on your family services, just absolute rock stars over there at Home Partners. They go so above and beyond to make sure every single deal closes, and they do everything they can to help and assist and educate you and the other side as well along the way. So thank you for that, Raul. Next up on the stage, we have Mr. Craig Garcia. Craig, welcome. How are you doing today, sir?
I am doing good.
Good,
Glad
good.
to be
Thanks for
here.
being here.
Thank you.
Absolutely. So first off, what's going on? I know obviously we're in the month of August and there's been a condo change. So can you walk us through what that is?
Yeah, so the big condo change, we've been talking about it so if you're hearing this for the first time, I would be a little surprised. But it took place at the very beginning of August, and essentially what it said was, and this is a nationwide thing, any condominium that's trying to get a Fannie Mae or a Freddie Mac loan, we always used to have these two paths of approval. One was a full approval, which meant that they had reserves, enough reserves in the budget to get a full approval, and you could do, 5% down, 10% down, 3% down if you're a first-time buyer. And then, but if they didn't have those reserves, or some other things, some delinquencies. If it wasn't perfect to get a full approval, there was always this limited approval, which meant, hey, you could still get a Fannie Mae, Freddie Mac loan, but now instead of the small down payments, you had to put probably 25% down to buy a primary residence or 30% down to buy a second home or investment property. But you had that option. Hey, put more down, get a Fannie Mae loan. We could even take a Fannie Mae loan and then combine it with a second mortgage, to like a 90% total financing package. But that limited review piece where they don't have the reserves is not an option anymore. So that stopped at the beginning of this month with new applications. So there may still be deals that are closing on a limited review right now because they started the process prior to August. But moving forward, it is no longer an option for new applications. And so so what does that mean? That means that if a condo doesn't have reserves, now you really need an alternative type lender, okay? And you need an alternative type investor to buy that loan. And so we have a lot of those. If you are a listing agent and you've got a condo listing and you know that listing does not have 10% reserves in the budget, then what the big thing for you to understand is you cannot, in good conscience, accept a contract anymore with a 5% down payment, or a 10% down payment. And especially if they're coming from, a bank or something like that, where maybe they don't have some of these alternative options. That deal's not going to close on a Fannie Mae loan if they don't have reserves. With buy and very large, I mean, is there some kind of fluky thing that might be out there? Maybe. But generally speaking now, if the condo doesn't have reserves, you're looking at a bigger down payment. You can't probably go to a bank, some of these big banks certainly. But we do have options. They're definitely option. We have all the different investors that handle different types of problems on condos. So we definitely have, we still have options, and we're getting deals closed. And because this is such a big change, we are even seeing agents come to us with deals that have had problems that are a little bit what I would not normally think are problems, but I think that's safe to say that the industry is a little skittish on condos because of all this. So we just had a deal that we had to take in from somebody, and the lender said they couldn't do the deal because the condo had a first right of refusal, which a lot of condos have, and that's not really a reason that we haven't done a loan in a long time. So anyway, we're going to close that deal today. So just some interesting stuff that's out there as far as the limited review goes. So if you don't know, said before, if you're a listing agent and you know your condo doesn't have reserves, if you don't know, every time you get a listing, send the budget, get the insurance from the seller. The seller's entitled to this information, even though if you just call the association, they might not give it to you. Get it from the seller. Have the seller get that stuff. Get it to us. We can review it for you. We can let you know right up front, hey, this condo's got reserves, or hey, no, it doesn't have reserves. So do not take any of these low down payment contracts on that listing, because it's not going to make you look good if that deal blows up later on for that reason. So anyway, so that's what's going on with limited reviews. And then Sage is pointing out in the chat what we're going to talk about next, probably.
There you go.
Which is, so January, that change goes up to 15%. So now a condo doesn't have to have 10% reserves in the budget. It has to have 15%. So that is going to be taking place with new applications starting in January. So what we're going to do is we've already done some trainings about this, but we want to give you guys an opportunity to use this coming change as a way to have more conversations with people in condos, on people on condominium boards, people that are because what's coming up for these condos is the budget season, right? So from between, I don't know when that's going to start. I mean, everybody's different, but in between now and the end of the year, all these condominium boards are going to be meeting. They're going to be working on their budgets for 27. And we want to give you some language to talk to these people about. We have a handout on our website, and I'll put the link in the chat. There's even we have a calculator where somebody on a board can take the budget that they're looking at doing and plug in certain numbers, and it's going to tell them whether or not, including some of the add backs that lenders do. So it's not as straightforward as just saying, hey, they're collecting $1 million a year. They have to be having reserves for $150,000. It's more nuanced than that. They actually might be able to get away with passing the 15% reserves, even though they're on $1 million budget, they're only collecting $90,000 because certain things in the budget get extracted before they do the calculation, before we do the calculation. So there's a calculator on our website to kind of help condo associations do that. You guys, as agents, don't have to know any of that stuff, how it works, and don't have to know how to do it. But getting condo people or people on condos aware that, hey, this change is coming, and we've got people that we can connect you with to talk about that, before you guys do your budget, because it could help all your unit owners with financing next year, I think is going to be a good opportunity.
Yeah, that's a good point, Craig. Someone in the chat had said that means HOA will raise fees again. So how will you see an impact in the near future? How will it impact prices?
So it's a great question, Alexi. And I would say this, I'm looking at budgets every day, and we see now, because you've got a lot of these guys most of these condo boards, they don't really care necessarily about what lenders are looking for typically, but they do care about requirements they have from the state. So the state's been on this push, for a while. And so it's not uncommon anymore for us to see condos they're way beyond 15%, the way we do the calculations. They're trying to make up for the fact that they haven't been putting away stuff maybe for a number of years. And now they know they have to be on some type of a track to do that. Now, some condos are still just kicking the can as far as they can down the road, but there are a lot of condos that are already kind of biting the bullet on this. And we've seen some where the worst of the increase of the condo fees is probably already there. I mean, and matter of fact, we saw one, and this is one, it's not like the most, but we saw one that they're already fully funded on their reserve budget. So that means that they've done a reserve study. They did one of these structural integrity reserve studies, and they've got all the different components that they have to save for, and when they're going to be needing to be replaced. And they've actually already reached the point where they're fully on track. They've already got enough in the bank based on what they're collecting now to be fully on track to repair all those items when they come due. That condo, technically, if could experience some HOA fees coming down because the insurance might be getting better. Because insurance, and generally speaking, and Ryan will speak to that next, a lot of condos are experiencing some improvement on what it's costing them for insurance. So yes, there's going to be some that are still on the upswing, but I would say it's this 15% new bar isn't a crazy number for a lot of condominiums. For some, yeah, because they haven't done anything. They still haven't, really done what they've needed to do. But I don't think I don't think that this is certainly going to be any as dramatic of an additional burden on these associations as the stuff that's been happening over the last couple of years has. I don't know. Hopefully that helps.
That's a great point. We had a few questions come through on this, and Craig, first one might be for Ryan in a minute to answer, but the question is, is insurance coming down or down some more? I don't know your thoughts on that.
So I'm going to punt. I'm going to wait.
Right.
You're going to wait. You're going to wait for 5 minutes, and you're going to hear from Ryan on that one.
And we'll knock that one out. Awesome. So next question was, can you explain condo questionnaires, and will there be long form? And if we have any lawsuit in question, how will that affect the loan approval?
So nothing's changing with that. So if somebody's going to get a Fannie Mae, Freddie Mac loan, and we know that going in, that means that they're definitely trying to do a smaller down payment, or where they're trying to get a regular bank loan. Then every questionnaire is going to be a long form questionnaire. And if there's litigation, it has to be considered minor. It has to be an identified reason, or identified number. And it can't be certainly for structural repairs and stuff like that. It can't be for anything big. A slip and fall where the association, the insurance for the association is paying for the defense. there's certain things that can be okay for. But some of these, but it's less impactful if you're already looking at one of these alternative loans. There are shorter form questionnaires in the world of the alternative loans. So if we know that we're trying to go with an alternative loan and somebody's coming in with a bigger down payment, 25% down on a primary residence, one of our investors has a pretty short form questionnaire that we use, and we like to use it because it doesn't get too deep into the repairs that may be going on the property. It keeps it very, very simple. Hey, are you aware of any structure or any safety issues in the property? And if the answer is no, no safety issues, they're not going to be digging into, for the most part, repairs and things like that they are always going to do for the most part on a full questionnaire. So there's more nuance, and it's different depending on who the investor is. So, but that's a little bit more. But we put the right deal in the right investor. That's what we're trying to do. That's what we're doing all the time.
Yeah, that's a great point there, Craig. And Amber from marketing put in the link for the condo reserve funding calculator and also the condo loan resource library right in the chat. So thank you for that, Amber. Really appreciate it. One more question for you, Craig, as well, right where we are. Do you have an estimate of the percentage of buyers unable to purchase because the condominium reserves do not meet Fannie Mae and Freddie Mac reserve requirements?
No, I do not.
Fair.
I would like to, but no, I have no idea. So no.
All right, fair enough. So moving right along then, what's going on with, November right around the corner and changes that could be happening with appraisals?
Yep, I'm sorry, I'm so full of great news this morning, but we're going to be getting, we're going to have a webinar on this, I think, in September on this, and you'll hear a lot more about it. But just to kind of give you a heads up, so November is the biggest change that's coming for appraisals that's happened in the last couple decades, probably. Essentially, they are making the data input for appraisers a lot more granular and detailed. So whereas an appraiser might have certain language that they use to describe a market and properties and different things. Now there's going to be a lot of different, and they might do that in a paragraph, and sometimes they might be able to take some of that information and copy it from one place to another. Now there's going to be a lot more granular input on every appraisal deal. So we're going to get into the details of that. Essentially, the nature of it is appraisers that I have spoken to are saying it's going to be, it's not going to be any fun for them. It's what's going to be important for us, loan people, real estate agents. Appraisal turn times are going to go up, and the cost of appraisals are going to go up starting in November because of this change. And so we'll get deeper into that, but just to kind of give you a heads up that is coming, and we'll have more information for you. And we're going to get an appraiser on and do, a whole kind of deep dive on that topic, and we'll let you know about that information as it's coming out.
Yeah, thanks for that, Craig. And I know you made a joke about, bringing all the good news today, but it's important. That's why we join these meetings, to be proactive in this. And that's what a real estate professional is. They know what's coming, and they can educate accordingly. So, hey, it's necessary, right? So we appreciate you for that, Craig. All right. So, Craig, as you wrap up here today, if you were to leave everybody watching with a golden takeaway, a golden nugget, what would that be today, Craig?
Don't list a condo. Don't put an offer on a condo without us taking a look at the budget and the insurance.
Yeah, straightforward, to the point, super helpful too. Awesome. Well, thank you, Craig. Always a pleasure, sir. Really appreciate it. Great to see you. Thank you so much. All right, next up, we have Mr. Ryan Pappy with Kai's Insurance. Ryan, how are you, sir?
I'm doing good, Craig. I appreciate you punting that question. And considering that you're a Florida State fan and the outlook that you guys have this year, this is something you're going to become very accustomed to.
Wow.
But I can't complain, because as a Dolphin fan, we're probably going to be doing the same thing.
That is true.
But
that is true. Well, what a way to start,
Ryan. Happy early football season to everybody out there. Everything is great.
Good.
We have good news today.
All right, good. There you go. We ended out on the high note. So yeah, what's going on with the insurance market, Ryan?
Yeah, I feel like we've done a few of these already, back to back, quarter over quarter. We're still continuing to see good news out there. So the question that was asked before, I'll get right to it. Have rates dropped? The answer is absolutely. So when we look at the clients that we had last year versus the clients that we have this year, and we look at their premium, it's a 25% reduction thus far in premium. We would still have to go a very long way down to even get back to where we were in 2023. So that gives you an update. It gives you an idea of how much we increased in 2022, 2023, and 2024 to get to where we are now. And that also gives you a good feeling for how we can swing back. So if we look at the market and where it's going, the past, that 25% number, just so you have a good idea, that's our policies in the state of Florida, and we're looking at over 40,000 policies.
Wow.
So it's a huge sample size. It makes it difficult to run a business sometimes, but it's great news for you and for your clients. As we look forward, is this the bottom? Well, the things that we're looking at in the market, to me, that indicate that we are not even close to the bottom, is we're still seeing increased eligibility. So you're seeing carriers that were out there before that are now coming back into the market. They're making it easier to do business with them. They're accepting more, issues at maybe around the time of closing, but they're all participating in the game again. So that's one thing that we see. Another thing that we see, which some of you guys have asked me about in the last few weeks, is if you're a carrier and you want to get super competitive on rates, one thing that you may do is, because if you have a big book, and some of these carriers have 100,000 clients, it's hard to really get into those numbers and get aggressive because you have commitments to each one of those clients. So they'll start new carrier programs. So a lot of you guys have called me and asked me about, have you heard of this carrier or that carrier? In reality, they're the same carriers. They're just writing underneath a different program so that they can start fresh and be super competitive. So we're still seeing that happen, and that's happening across the board with many different carriers. I also, having had conversations with a lot of carriers that are looking already into their 2027 revenue and projections and all that, they are anticipating further reductions. So we may be in the same spot next year where I'm sitting saying, oh, do you remember on Hurricane Andrew's anniversary, August 24th, from 2026, and 2027, we may be down another 25%. That would not be shocking to me at all. And the reason for that is the carriers that are now writing business in the market, if they look at their year-over-year sales and growth, it's astronomical. Why? Because last year they weren't participating. So they feel very confident that they can continue to grow at whatever rate that they're comfortable dealing with. The thing is, they're starting to realize that other carriers are doing that same thing in the market. And for them to actually hit their new business numbers, they're going to have to drop even further and sharpen their pencil, give better incentives, better service. So it's much better now to be a consumer in the state of Florida than it was before. It will be much better next year. Storm, no storm, doesn't really matter. We're moving into a good spot for that. So certainly something to be happy about.
Yeah, great update, Brian. Great way to start it. Love that. That's awesome. What about roofs? What's going on with roofs?
All right, so roofs, another thing I'll steal from Craig. I think you said funky or something. There's always the funky outlier when it comes to roofs. The overall, and there's been a lot of press lately because there has been nothing but good insurance news. They want to get news out there. A lot of press about carriers going from 20 years to 15, whatever it is, for a shingle tile roof. At the end of the day, and what it means to each one of you guys when you're working with somebody that is purchasing a new home, is shingle roofs less than 15 years, and less than 15 years, and the newer you get, obviously, are going to get the most options. There will be some carriers going 15 to 20 years, but if you're over 20 years, you're probably going to end up with Citizens on a new purchase. Shingles 20 years. Tile can be up to 30 years, and metal can even be up further. But the general rule is anything over 15 years and you're purchasing the home, you're going to want to speak to an agent about it. You're going to want to have the inspection report pulled. You're going to want to see what carriers are there, because if there's a carrier that's the most competitive and they'll take it to 20 years, got a 13-year roof, okay, that's enough time. But really, when it comes to roofs, there's no across the board scenario. It really is important that if you think that is coming up to 10 or 15 or 20 years, you consult us. We can tell you what the market is saying for that home in that particular area, because there's always different variables. But I would be very hesitant to sit on any particular rule when it comes to insurance for the roof. Another thing that we've seen, because roofs are a main driver of premium, we've seen some carriers that will offer a roof for actual cash value. Okay. If somebody is a client of ours and they have an issue with the roof and it's something that we've prepared them for, the fact that a carrier will actually provide actual cash value is not a horrible thing, because that will allow them to get together the funds to do their new roof. However, we've heard it portrayed in many cases that purchasing it at the time, at the time of purchase in order to make ends meet, to get a home with actual cash value for the roof. And some people market that as a good idea. To have your roof for actual cash value is worst case scenario. And when you're starting on a new purchase, do not start in worst case scenario. So I just want to address that, because we're starting to see more and more of that. That basically center around the concept that, and Craig, correct me if I'm wrong, Fannie Mae and Freddie Mac are now in some cases allowing that. But these are all very circumstantial things and never a good idea to buy a home if you can only afford to insure the roof for actual cash value.
Got it. Thank you for that, Ryan. Appreciate that update there. How about AI? We're hearing about it a lot. We've heard about it earlier today as well. What's going on? How's it impacting the marketplace?
Okay, so AI, we're insurance agents like everybody on this call is real estate agents. So we sit in the same seat, right? So we're all experiencing AI probably in the same exact fashion, which is that, well, first, there's a lot of technology that we can utilize that's not considered at AI, which helps us as a business and helps you as a client. If the goal was just to be able to spin around and send you guys quotes that were the quickest and the fastest, we could do that, and we could have hired probably 10, 15 AI companies to do that. The issue is we see you guys as a business. So we go business to business with you guys. And what we want to give you is a full picture of things. We want to give you options, and we want to look at each individual case and make sure that we're preparing the best possible solution. So that's kind of where we stand. I'm sure that's very much where you guys are when it comes to AI in the real estate world. We believe that our wisdom, the options we can provide, all that are much better to be done direct person to person. But that doesn't mean that we can't use AI to improve some of the things that we're working on. So AI right now is significantly decreasing the amount of information that we need to receive from you in order to get an accurate quote. That doesn't mean that we won't ask you to verify it, because we want to have it on record and we want to make sure. But AI will give us information for roof updates, maybe wind mitigation features, all those types of things. We're going to be able to get that on the quoting level. And over time, we'll probably be less dependent on you guys providing that information. But this is new territory. And so we will be double checking every single thing that we do. But that's one area that we're seeing it. The second area that we're seeing it, and where it can be helpful to our long-term clients, people that are in the renewal process, is AI can really do a very good job at quickly comparing and contrasting their current program versus any other insurance program that's available on that day. So you may not even have to wait for renewal. You may get an update halfway through that there's been a carrier that's out there that's less, whatever it may be. It also does a compare and contrast, which we do now, as part of our service. Those features will be coming on board more and more. But again, where we could streamline this, if we had the option, we could streamline it from when one deal goes in to your Kai system, automatically there's a number put in your phone. That all that is available to us right now, but we see our relationship to you is business to business. So we work best when we're working with you individually on each process, and so that we can give you options and have a full understanding of the situation. We have not seen AI that's been able to do that, thankfully, because we take a lot of pride in doing that. One area that we are looking at is, what about the people that start in AI? So how do we get in front of clients that are searching and they just start with AI? For example, if I pull up a phone and said, who's the best loan officer in Broward County? I know it's Craig Garcia, but does ChatGPT know that? It's going to offer us some suggestions. How do we get in that? So that's something that we're working on as a business. I'm sure it's something that you guys are working on as agents. We see AI really being able to be a tool that we can utilize to expand our bandwidth per individual. And whether that's for many of you guys, Nick, Carolyn, Malin, Whitney, whoever it may be, we want to empower them with that AI, but not lose that human touch with you, because we know at the end of the day, dialogue matters, and understanding the full situational awareness of each and every transaction is crucially important, and we'll never give up that in favor of AI. So just wanted to give you that. Stephen, I don't know if you have any questions. I know we have 1 or 2 more minutes before we wrap it up.
Yeah, definitely. That was a great point there on AI. So one is more so a comment from Craig. He said, that's correct. They are both on condos and on individual homes, ACV for roofs only. So he was just kind of commenting back to you on that. But no questions so far on the AI portion.
Okay.
And, Ryan, actually, we did just have a question come through.
Okay.
So here we go. If the roof is over 20 years old and Citizens provides the policy, would they ask the owner to replace the roof, or do they need a certification that the roof is still good?
So Citizens, anything after 20 years, you need a 5-year verification. That's what Citizens is basing that current policy on. The new policy, which would be from a new purchaser, they would have to get their inspections, do the roof verification on their own, and have the same results. And then Citizens, very highly likelihood, would take it.
Got it. Okay. Well, thank you for that, Ryan. That's the only question that came in as of now. So, Ryan, if we were to wrap up and kind of close out with a golden nugget, a key takeaway for everybody when they think about insurance, what would that be?
I would say it's the best time ever to buy insurance. It'll be a better time to buy it 6 months from now. This is an area where the state is like politics and legislation made a difference. We're all seeing it every day. It is interesting, and there's a lot of new carriers that are coming into the market. It's really important as the market continues to expand that we work very closely together. We are vetting a lot of these companies as they do come on board, and we never provide any companies that aren't A+ rated. So, not hopefully we'll be working on good new stuff, but we know in the insurance world, there's always the things that come up, and that's really what we're here for, is to be problem solvers.
Yeah, absolutely. Well, thank you so much for that, Ryan. And everybody, as we conclude today, I mean, you've heard it from your family of services. They really are an amazing group of professional problem solvers. They've got reps in your office. So please make sure this week, today even, get connected with every single family services rep in your office and just have a conversation with them. Ask them to give you an update. Ask them just to grab a coffee or something. And then they will, because having these relationships and having the expertise that you've just heard is so invaluable. And so again, I'd like you guys all, you are already doing it, but join me in a nice thank you and a round of applause for our family services leaders today. Guys, thank you so much for taking the time. I know how incredibly busy you all are. So to be here all at the same time really means a lot. And thank you so much for pouring into our associates every single day with resources, with education, with support, with helping deals go through and really keeping these waters as smooth as possible. So again, thank you guys. Really, really appreciate it. You're getting a lot of love in the chat, which is definitely well deserved. So thank you so much, everyone, for joining on. Again, big thank you to our leadership team. And we will see you all next week on our next session. And again, remember, tomorrow at 10, we have a low special presentation. So make sure to be there. We'll see you guys soon. Thank you all so much. Have a wonderful day, everybody.